Hi traders, welcome to this video on the euro dollar and pound dollar. My name is Chris Forsek from Elite Currency, and we're going to take a look at the second half of this trading week. So first of all, with the euro dollar, actually, I'm showing you my own SWAT template with SWAT candles and moving averages on purpose because I wanted to show how that retracement and bearish correction took place. That is something I mentioned on Monday. I was bearish on the euro dollar unless price would break above 119 with a clear daily candle. That did not happen as we expected because I was looking for a bearish bounce in this heavy resistance zone. If you look at the moving averages on the daily chart and the previous top, in a overly bullish swing that was in need of a correction. So there were a lot of reasons I think that price was going to make a rejection, and it happened, as we can see, in two phases. So what I said on I think on Monday or Tuesday with the live webinar as well, with the wave webinar, is that it's going to go like this, and the second break will typically be better to wait for kind of a correction, a rejection, and then a bounce. So anyone who's looking, a little bit more adventurous with trading the bounce could be looking maybe for a head and shoulders pattern here or some kind of rejection here. That would be an early way of trading it. Could put a fib on the first swing like this and look for an entry maybe at the 50 fib, for instance, or 61.8, although price missed the 61.8, right? So those would be more adventurous, let's say more risky approaches. Other ways could be to wait for a time pattern to occur, so that this would be a high after 5 to 6 candles fail to break above the high. So that's 1, 2, 3, 4, 5. That's this candle actually right here. Or of course the close below the 20 MA, and that's this red candle, signaled also by a red arrow. So that could be another way of trading it as well, or the fractal break below here. In any case, all of these options in a way would have done well. In the meantime, price falling from that resistance zone towards our target area, and hasn't reached fully the target area that I have in mind. But any trades could be easily moved to break even, or any trail stop loss could be actually moved beyond or above these fractals to lock in a little bit of profit there, depending where the entry is. And I think the good target could be 117.80, for instance, or 118, or even 117.50. Depends a little bit of kind of risk appetite you have. But certainly, I think this particular pattern with a 123/ABC working out nicely, and you can see how what I said on Monday, how that indeed took place, and how it could be traded, and how the SWAT template, I think, makes it visually easier to see this kind of pattern play out. So I think we had great potential trades to the upside here because of the divergence. Long reversal setups were good. Here were potential setups for a continuation higher here as well. And I think that this was a good reversal setup as well. Still space to the 144 EMA and 233 EMA zone. I don't like to trade those reversals right in front of those as well. Anyhow, so I think there's still going to be some space left. So looking at lower time frames now could still make sense. Like on the 5-minute chart, this could have been an entry that could have made sense, earlier today or even here. On a 15-minute chart, same thing here. You can see the bear flag pattern and the break below the 20 MA again. Here retracement with the blue candles and the red candles confirming the re-break and a nice continuation lower. So those would have been potential setups on lower time frames, but those are behind us. But they could still offer potential setups if we get a retracement again and a continuation. It could still be okay for a follow through towards lower targets, in my view. I think we're in a bearish mode, and usually speaking, we'll continue with that bearish kind of vibe and momentum until we hit that target zone, I believe. So still potential there for trading on lower time frames. On higher time frames, I think there's not that much space. We're talking about 20 to 70 pips zone. That's not that much for a higher time frame, so I would not. And also, if you look at the 4-hour chart, we have a red candle, but it's too close to the long-term moving averages, so that's not a good 4-hour setup. So I think for the 4-hour world, it's not appropriate. I think for the 1-hour world, we already had a setup up in here. I think there could be maybe 5 or 15-minute scale-ins, smaller trades with less risk that could make sense towards that target zone. That's my 2 cents at least. 4-hour chart I think is not worth it because of the particular structure of the moving averages, where we have the long-term moving averages coming in as support, and we had, of course, the very long-term moving average already acting as resistance. Now it's being squeezed. I don't think this is a good time to short into that squeeze right now. But there were certainly good trades on the hourly chart and 5 and 15-minute chart in the past, recent past, and maybe 5 and 15 for a small trade in the near future. Otherwise, I would wait for, on the 4-hour chart, I would wait for a new blue candle for upside. That could indicate the upside break, or if there's a bear flag and new red candle, there could be a downside break. So basically, I need to see a new movement around the 21 EMA before I could think about a swing trade on the 4-hour chart. Now is not the right time, in my view. Why 117.50 as a target? Well, let's take a look here on higher time frames to get a little bit of sense of that. Basically, what we're looking at on higher time frames is this an ABC pattern or a 1, 2, 3? If it's a 1, 2, 3, it will break below 117.50. It will break below 117 and whatever this bottom is, 116.75, and it will make a new low. And in that case, we're probably looking at an extension of a 3 or even the C still. That said, this is a pretty good momentum. So at this moment, I think 117.50 is more reasonable because of the head and shoulders pattern. And considering the momentum and the fact that this could easily have, and the fact that this could easily have completed an ABC pattern, and that this could easily be the leg up correction and a leg up, that 117.50 a head and shoulders pattern plus the ABC could easily be a bouncing spot for upside. So that's why I would, from a discretionary point of view, be very careful with 117.50, and could certainly be a zone that could be considered for reversal ideas as well. And if it breaks below that, of course, there's space down to 117, but we got to also keep in mind that there could easily be a triangle pattern in this zone. So it really needs to break below the bottom before I turn very bearish. And then I would look for a break, candle close on the daily chart below that, 116.75, flag on the 1-hour chart, and continuation lower towards 115.75 and 115. If we get a bounce at the 117.50, like I suspect, then it depends with how much momentum. And yeah, we need to see this break above 119 before we get really into more free space, more unobstructed area where price could have that pace to go up to 120 and 121 and 122.50. Because then in that case, it's breaking above those double top. It's breaking above the long-term moving averages. And you can see how fast price was moving here. So it could do the same again. And here too, and here too. So it is an area where price seems to move and travel quite quickly. So it could do that again with that same pattern. So, all right. I think that's it for the moment. Intraday shorts down, in my view, I would be looking for intraday shorts down and then bounces up. And if there's good momentum, try to see if there's follow-through trades to the upside. If there's too much bearish momentum, of course, then this zone would be leaning itself for downside trades. Pound USD was also bearish. I also said that I was looking for a pullback and a bounce and then a rebreak. So the rebreak happened here on the 1-hour chart with these red candles. And here was the first break, and here was the rejection. So same kind of potential trading ideas as on the euro-dollar. I'm not going to repeat myself here, but you can see same kind of situation. Enough space towards the 144.233 MA, and this zone right here was good enough to trade. And it actually broke through this trend line. It actually broke through the 144.233 MA. Those things can happen. That's great. It's an extra bonus, but there was space towards that zone, and that's important too. So it broke these trend lines, then it broke this support zone, and it's reached the first target at 137.70, and after a triangle pattern, continued lower and is moving into this target zone at 137.50. All right, but pretty nice how you can see break, pullback, continuation right smack into that 137.70 zone where it stopped, and then now it's following through. So good 1-hour trades there, reversal trades, 4-hour chart. in my view, a little bit different because it is breaking through the 144 EMA on the pound. It didn't on the euro dollar. So this would be a okay pound dollar 4-hour chart trade. I mean, the moving averages are flat and on top of each other, so certainly not the best and a little bit yucky. So I think less risk would have made sense, but valid 4-hour setup though, and it's on its way at this moment. But yeah, certainly with less risk because of the support area marked on the chart, and the moving average is so flat and so undecisive that would not want to take a full risk there in any case. We're in a triangle pattern on the daily chart with a higher low and a lower high. And also yucky moving averages here being flat and on top of each other. So it's not that pleasant from that point of view. I think at this moment, if there is any retracement and continuation lower, it could make sense for new red candles to that break below the 20 MA to trade to the downside. Moving it to break even would make sense, I think, as well, considering the state, because there could always be a break pullback continuation pattern here too. The next continuation could be good, and for long setups, I would really need to see strong impulse breaking above 138.25 at the very least, followed by a flag on the outer chart and then a continuation higher before I would trade it to the upside. Because it would have to go back into the channel and break above, clear all this resistance here with some good momentum. Otherwise, I'm leaning more, if it does move up, I'm leaning more towards a pullback continuation pattern that could retest WIS 5 or WIS 6 first of all, or WIS 4 even actually. All right, so yeah, that is my view on the pound USD. So yeah, hope that helped. We certainly appreciate your feedback on elite currency with independent review sites, websites like Forex Peace Army and Trustpilot. Big thank you for that. And stay in tune and stay in touch with elite currency. There are a lot of, I think, exciting things coming up in September. So stay in touch because, yeah, I think there's going to be a lot of cool things coming up that you would like to know about. So join our webinars, and we'll wish everyone great trading. Cheers. Bye-bye.